Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the new edition of Top Stocks videos. Joining me this week will be Andrew Rocco. Andrew and I each have picked one stock each, and we'll be discussing that with you. The stock I've picked is American Express. Needs no introduction. Reported last week, provided impressive guidance. The stock shot up. But my core thesis is that this isn't a one-trick pony. The outperformance we saw in the Q4 results is representative of a sustainable growth trajectory for American Express that puts it in a league of its own relative to the Discover financials and the Capital One financials of the world. So let me show you what I'm referring to. So what I have here is American Express relative to the S&P 500, the stock price performance over the past year. As you could see, American Express was essentially tracking the index. S&P is the red line, American Express is the blue, and then we have this huge pop over here. So 4.2% decline for our company and 11.2% for the S&P. In here, it's the same chart. I just added the Zacks finance sector to the mix. As you could see, finance is doing relatively better than the S&P as well. But American Express is at the top. So the question then becomes that if the stock has outperformed already, what further upside is there? And it's a premium valuation. And you could see here, I'm showing American Express versus the finance sector on a forward 12-month PE basis. And it's a very long period, as you could see in here. This is the great financial crisis. American Express 16.1 times, premium to the finance sector as a whole, particularly recently. I'm showing here Discover Financial, 8.4 times versus 16.1 times for American Express. Obviously, Discover Financial and American Express, though both card issuers, but targeting different market segments. Not to pick on Discover. In fact, Discover is doing relatively better in terms of valuation compared to Capital One or Synchrony. So why the premium? And this slide here, which I copied from the company's presentation last week, should clarify why. The top portion shows what American Express guided this time last year for 2020, for 2022, for 2023, and long term. They were guiding for revenue growth of 18 to 20%. They got 25%. They were guiding for EPS in 925 to 965. They achieved 985. This gives you a sense of the inherent conservatism of management. For 2023, they were asking for higher than long-term aspirational levels of revenue growth. Now they are telling us 15 to 17% revenue growth. Now, this is a year when we all know The economy is slowing down, consumer spending is slowing down. There's concern and fear about a recession. They are projecting these. Let me go back to this. And long term, in excess of 10% revenue growth and mid-teens EPS growth, so very strong and very visible growth trajectory. One last thing I want to show here. This is American Express relative to the market as a whole. As you could see, this is a long-term chart, including, again, the global financial crisis. As you could see, the stock used to trade about in line or even at a premium to the S&P 500. Around this time in 2015 is when their relationship with Costco ended. And since then, it has been trading at a discount. And my thesis is that given what I showed you in the previous slide in terms of the growth metrics for American Express, this stock deserves to go back to how it traded in the pre-2015 phase, meaning in line or at a premium to the broader market. One other point I want to make, though it's understood, it's a premium card issuer with a premium slice of the consumer market. No one is immune from recession, even the premium slice of the consumer, but a lot less than what you would expect for a Discover Financial, a Synchrony, a Capital One. And we saw that in the net charge-off data for Q4 and also for management guidance. So this is a blue chip card issuer with a lot of inherent built-in competitive advantages. And I strongly feel that the price momentum we have seen already will continue through the remainder of 2023 and beyond. That's it, folks, for me. With that, I'll pass it on to Andrew Rocco.
Thank you very much, Shiraz. My name is Andrew Rocco. I'm a stock strategist here at Zacks Investment Research, and I'm going to cover my stock pick of the week, which is Mercado Libre, ticker symbol MELI. Perfect. So as I said, my stock pick for the week is Mercado Libre, ticker symbol MELI. As you guys can see, it's a Zacks ranked #1, which is the best possible rank that we have for a stock. And before we jump into the details, I'm just going to provide you guys with a little bit of background on what Mercado Libre is, what the company does. Mercado Libre is an e-commerce platform which is based in Argentina. Its largest market, however, is in Brazil. So the company has a similar business to Amazon, and it's often dubbed the Amazon of South America for that reason. But in fact, it actually has a larger footprint than Amazon in Latin America. So Mercado Libre is the dominant e-commerce platform across Argentina, Brazil, Uruguay, etc. Beyond e-commerce, Mercado Libre runs 4 other businesses, including a payment platform for online sales, an advertising business, an e-commerce platform tool called Mercado Shops, as well as a credit line. And since going public in 2007, the stock is up a whopping 4,236%. So we're going to explain why we think that performance can continue. Before I get into the stock itself, I like to use a top-down investing philosophy. What I mean by a top-down investing approach is I like to first focus on the macro factors of the economy and the market that are affecting the stock. So in this case, we're going to look at Argentina and the Argentina ETF, which is ARGT. It's the most popular ETF traded here in the United States. And Argentina is one of the most attractive markets in the world, in my opinion, and it's a contrarian play. Over the past year, the market has outperformed almost every market globally, including the S&P 500. Over that time period, Argentina is up 47%, while the S&P 500 is only up 5.7%. Also, another positive about Argentina is their GDP grew by a healthy 6% last year, and it's expected to increase by another 5% this year, according to their economy minister. So a very strong growth as far as GDP goes. And another fun factoid is that studies show the country that wins the World Cup tends to see growth increase by 1.6% in excess of their normal growth after winning the World Cup. So for all you soccer fans out there, obviously Argentina just won the World Cup. That's another potential catalyst. Since Mercado Libre gets most of its revenue from Brazil, it's also worth analyzing EWZ, the ETF, which is the most heavily traded ETF tracking Brazil. And though Brazil is not as strong as Argentina, it has outperformed most global markets over the past year. It's up 11.7% over that time. Brazil has also recently elected a new president who is likely to implement more in the form of stimulus. So that's another potential catalyst for Brazil and potentially Mercado Libre over the coming months. Next, in the top-down approach, I'm going to focus on the industry group. Mercado Libre is a member of the internet commerce industry, and it's a top 14% industry group of the 250 tracked by Zacks. So our in-house studies have shown that roughly half of a stock's performance can be attributed to an industry group. In fact, the top 50% of Zacks industry groups tend to outperform the bottom 50% by a factor of more than 2 to 1. So the individual stock is important, but the industry group of which it's a member is also very important. And one thing I want to mention is this industry group has actually underperformed over the past 12 months. However, it's starting to pick up momentum. You can see over the past month, it's up 19% versus just 4.5% on the S&P 500. It also has many other strong stocks, including Alibaba, the Chinese e-commerce giant, JD.com. So that's a sign that the group strength is broad and this group is in a bullish phase. Finally, we'll get into the fundamentals behind Mercado Libre. So Mercado Libre has gone through some tough times as far as Argentina's economy, the pandemic, but their sales trajectory has been growing almost exponentially despite the roadblocks. So over the past 2 quarters, EPS grew 33% and 77% on revenue of 45% and 52%. So strong mid double-digit growth on the top and bottom line. Also, what I like is that the Zacks consensus estimate trend is moving higher. The stock has a ESP score of 13.27%. And basically what you need to know about ESP score is if it has a positive score, it suggests the stock is going to has a better chance of beating earnings when it reports on February 22nd. And then the last thing I want to cover as far as Mercado Libre goes is the technical picture. So recently, you can see on the left-hand side, it had a golden cross, which is a bullish technical indicator. Basically, what that means is the 50-day moving average crossed back above the 200-day moving average. That's a bullish sign for technicians. Another thing you could see is that it just broke out of this multi-month consolidation here. So strong on the technical side. On the right-hand side of the chart, you can see that it's been showing vast relative strength. Just over the past month, it's up about 19%. The S&P 500 has been lagging behind. So to summarize, I believe that this stock is viable on pullbacks. The risk reward is strong over the long term, and I would look for the stock to potentially test all-time highs later this year. So that covers my analysis for Mercado Libre. If you guys enjoyed this video, please be sure to go to Zacks.com/promo. We have some promos to offer you guys for our ultimate package and the different Zacks packages that we offer. But thank you guys for tuning in and have a great day.